Hi everyone, welcome to Weekly Market Insights. I am your RV Raju Angadi Vishwanath, a SEBI registered research analyst for the third week of October 2024. Come, let's have a sneak into the trade setups. Plan our trades for the third week of October. How we can plan, what can be the scenarios where the trades can be established to the point and objective analysis. I don't want to waste your time. Quickly, we are going to review the index analysis, Nifty, Bank Nifty, which of the sectors are bullish, and what is the range, and what could be the corrective patterns which could occur in, and stocks of the week we are going to discuss, and on the commodities front also we are going to have a sneak into the trades. So let's kickstart the analysis with the Nifty analysis. Nifty has taken a support, the price action zone, very simple price action zone. The support has been taken in the Nifty, which is around 24,700 to 800 zones where the support is taken, and we have seen a bounce. We can call it as a zone of confluence, 24,700 to 800, in between the range where the zone of confluence has been taken. If it is a ABC, or if it is a third which is in making, we need to see the higher top, higher bottom, the consolidation. Unless until we break the levels of 24,790, we are not on the downside. What are the supports for the Nifty? Very simple, very ultra short term, 24,885. Below 24,790, we are going to see a sell off. 24,790 below, markets will get weaker. 24,600 to 650, one minor support is there. 584, 24,584, 24,656 exact points. Below 24,400, 24,082. Maybe some rise could be expected if we consolidate, and if we doesn't break below 24,780 to 7,800 levels, Nifty can bounce back again towards 25,200 to 25,080 short term point, about 25,200, 25,340, and 25,425 levels can be seen. So what are the target points on the upside? Basically 25,000, approximately 25,340 zones, and the next zone of confluence is 25. 425 is what we are marking, where the price action congestion has happened. So the zone of confluence is what we see, 25, 425, or even 25, 450, 460 levels can be revisited. So basically, that's the structure on the Nifty, what we are facing and what we are seeing in the Nifty. 25,340 and 425 to 440 levels can be tested if we hold on and start moving above 25,080 and 140. The momentum can be on a short covering note. We can see the Nifty to bounce back, even if it is. Let me have a sneak into it. The short term trades, how to trade the wave counts is a different thing, and analysis of the Elliott waves is quite a different thing. So we need to be clearly objective to trade the waves. Even if it is a ABC, start with the ABC trend, then if the B wave ends here, then the C could be somewhere here, 25,400 to 600 levels, or even 25,600 levels. Once crossed, we have to review. So trade objectively, the breakout comes in with the lower channel or a wedge kind of a pattern, one more low or even gap up. 24,885 important support, the rise, even if it touches 25,000. 50, 60 levels, one more panic low. Oh, again back towards 24,900. Then the rise could start after a falling wedge kind of a pattern is cleared, and the rise of C could come in towards 25. 340 to 425 levels is the initial mark. If it is a wave 3, then the extension would start towards 24,000, 25,650 and higher levels. So that is the main motto behind the trade setup. As of now, those are the levels which needs to be watched. 25,425, about 25,525, 678 levels should be revisited. That is above these points. So point to point trades needs to be taken on the Nifty. And data hints 24,900 and 25,000 put writing, 25, 25, 100, 25, 200 call writing. So weekly expiry, it's very tight band trade. What is happening, the compression zone is, as we are forming a wedge kind of a falling wedge kind of a pattern as the internal waveforms on a hourly chart hints. So that's the weekly analysis. What to plan until 24,885 or 24,800 holds by the dips in the Nifty. Simple strategy. If that is broken, then sell the Nifty for lower targets. So trade with the levels objectively. That's the motto of the markets as of now. Well, let's get into the bank Nifty analysis now. 50,800 to 900. Quick support is 50,800 to 900. And 50,500 below, 540 to 480 below, we are heading clearly lower. Let us say 50,500 to 450 below, we are headed towards 49,800, 49,600, 49,200 levels, at least the minimum price objective what we hold. But if we are seeing a pullback and if we hold the levels of 50,700 to 800 levels, as of now 700 to 900, in fact 50,700 to 900, bank Nifty can head towards 52,200. 51,725, 52,035 and 52,250 or 52,400 levels can be revisited in the bank Nifty. That's what the charts are hinting as of now. The advance internal wave counts advance seems to be ABC. The structure seems to be ABC. That's what personally I feel. The clarity has not yet come in the bank Nifty counts. So bank Nifty holds the clue for the markets. One more low might be pending. Why? Because see, what we could see here on the charts is this is a irregular flat. Most likely seems to be a irregular flat in the bank Nifty. Either this could end here around 49,900 levels. If it's a bullish structure, one more low, one small bounce or one more low is pending, or else 49,200 levels. The minimum objective of 49,200 on the extension could be seen to shake out the traders objective. So let us see the counts as well here. That will give you the cluster zones. Right. 48,800 to 49,200 levels could be retested. That's what the chart ends. If the lows of 49,700, 800 is not broken, then clearly we are not, we are bottomed out. If it starts breaking 50,800, 700, then short the bank Nifty for 1,500 points of decline is the strategy. Until then, 50,800 holds, 700 holds by the dips for the targets of 51,700 to 52,200. That's what one needs to do for the bank Nifty. What about the mid cap Nifty? Even on the wave counts front, we have discussed irregular flat. As of now, until the trend line is broken, let's Nifty next 50. A bullish count is seen here. After a 3-wave kind of a decline, 5-wave advance is what is witnessed. Mid cap also, we are seeing that similar kind of impulse advance. Mid cap is holding strong. In fact, relatively, the range can be 12,800 to 13,100 mid cap nifty, plus or minus 50 points. FINNIFTY, what's happening? Well, clearly, we are not getting into the wave counts of the FINNIFTY. 23,850 to 23,450 is the range. 23,450 on the downside, 23,850 on the upside is the range for the FINNIFTY. That's what a simple momentum what we have seen. And we are bullish on the metal index. Clearly, we are bullish on the metal index. The momentum, once it crosses again 10,000 back above, the cluster zone 10,000, 10,040, metal index is going to skyrocket. Metal prices are increasing. China continuous news for the revival of property market. Government is selling the bonds. So, lot of things are changing. Property sector, banking, financial for China, which is positive for the metals. So metals would trigger a buying and a stronger note, and the momentum can be gained. The fifth might be starting. It's just a start of one of five, I believe so, after a consolidation. So metals looks to be on a bullish note. If you ask me, metals clearly looks to be on a bullish note. So clear, concise breakout momentum is happening even with the metals after the consolidation. So the rise can be stupendous. Wave 5 can be very strong for the metals. It could be just a start of third of 5 in the shorter term. So metals bullish, the sector what we like. Stocks to like, rounding bottom, cup and handle kind of a pattern. Silgo retail, where the stock is trending a year after a consolidation. The rally consolidation has happened, and once we break above 47 levels, the stock is headed towards 60 plus zones. Rounding bottom is still on the cards. And on the cash front, we are seeing a TV18 chart which looks good. Weekly we have made a X pattern, and the stock has broken out of the lower channel where the pattern channel breakout has occurred. Similarly, network 18, the lower end channel breakout is seen. So we like these couple of stocks in the media sector and Silgo retail in the cash counter. Before getting into the F&O stock, if you like our video, do subscribe to our YouTube channel TraderSet. Also visit us on traderset.com. Here we do provide the live trading room, SEBI registered advisory services, as well as the option Zeta workshop, the exclusive workshop for the option traders, how to identify the buying options, multi-bagger options. We are going to discuss. Feel free to contact us to know more. We are going to discuss lot of things where you are going to learn, earn, and prosper. The exclusive workshop for the traders, for option traders particularly, along with the live trading room and the advisory, what we are going to learn. These are the concepts what we will discuss, learn, earn, and prosper. So that's on the options front. And trader set also, the description we are given all the link and the contact details as well, and also in our website the contact details are provided. Feel free to contact us to know more about our services of SEBI registered advisory, live trading room, and the exclusive option Zeta workshop or the price action workshop which we are conducting in collaboration with the webinars. That's a brief about us. So learn, earn, and prosper. Why do we like the network 18? I'll come back to the charts of the network 18. Why? It's a purely a impulse advance. Then ABC decline has happened. Irregular flat has occurred after impulse rise. Irregular flat corrective pattern which clearly shows the correction could be on the verge of a completion. Now the bigger impulse could start in the stock. Bigger impulse in the stock means which can take the stock to the different zones or levels. The A, B, C, X could have completed, and now the trend could have been starting, and where it can take the trend towards. Huge potential is there in the stock. Why this is, see here we are seeing a clear one, two, third, fourth, and fifth, then A, B, C correction, then the third impulse should start in the stock, which could take the stock to the different levels until this low is held on 72 could be the stop for the stock. We are entering near the bottom contrarian. Then on a confirmation, we are going to re-enter on the more of the positions in the stock above 92. We are entering early on a first stage confirmation of the channel breakout with the volumes what we are seeing network 18. Now we are going to get into the stocks, other stocks, the F&O stocks for the week. The short term trades, ABFRL is what we like. Mm, the stock looks quite good on the charts, and once we break 345 to 350 three levels, the stock is heading quite higher. 332 would be the stop for the stock. Even if we break the levels of 332, it looks weak on a closing basis. Once we cross 345, I'm going to add the positions of the 380 or 400 calls. The stock can inch much higher as the trend seems to enter into a positive territory. 346 to 353 levels are the very important zones of clusters, and that is crossed. ABFRL looks very good on the charts. Keep an eye on the stock on a conditional basis. So Fed Bank 178 is the stop for the stock. 178 in fact is the support. Very important support for the stock is 178, as I see 178 as a key cluster of zone. This Friday 18th would be the results for the stock, and once we cross the zones of 193, 194 or 196 levels, Fed Bank is headed. Hmm, the towards the impulsive nature as the double bottom gets confirmed above 196 or 201, the stock can take it towards 230 to 250 levels, which looks more likely on the cards. The Fed Bank is what we like. The results can be positive. First confirmation 195, 193.50 to 196. The next confirmation about 201. I would take a call. The stops can be tighter. If you want, 184 can be the stop. Below that, it gets weak. But the price confluence zone 183 to 184 is very much important. If a false spike comes on the downside, 178 can be probably tested, but I would play with the tight stops. Federal Bank looks good on the charts. HDFC Life also looks good for me on the charts. HDFC Life Insurance, where some basing pattern is happening in the stock with 690 to 680 to 695 as a good support. And once we break 730.35, now already we are trading above the averages. 710 would be the stop, and the stock can head towards 800, 775 to 800 zones with the HDFC Life targets. And the one more stock which would like on the short term is Deepak Nitrate, which is a chemical stock. The charts hint consolidation is getting over with a flaggish point 2750 as a stop. The stock looks very good on the charts. Once we hold 2740 to 50, the stock is looking very good, and once we cross the zones of 2911, the 3200 to 3500 would be the typical targets for the stock. Very good pattern is getting formed. That's the view on the stock specific action. The disclaimer in the sense what I would like to add, if you stock market investments are subject to market risk. Please read the related documents carefully before trading or investing. Do consult your financial advisor. Also, plan your trades wisely. Trade wisely. Invest wisely. The video is for the educational purpose. So use it for your interest. So, What about the global markets and commodities? Small brief before winding up with the session. Global markets are still positive. So we are bullish with the Dow Jones or any of the indices what we are discussing apart from the IT stocks. Silver getting a very good support 82, 88, 200. And now the trend seems to be reversing on the upward trajectory. Once we cross the zones of 93, the maybe 1 2 1 2, then the third starts, it will be very big. 3 of 3 means 5 of 3 is what we feel the charts into, which needs to be addressed as of now. So that can take the silver towards 1,10,000 to 20,000 plus levels. In fact, the simple objective of 80 to 300 to 11,000 points from here. Let's consider so 1 lakh plus zones. 11th, in fact, not 11. It's 82 300 to 95 300. Let's say 13,000 points from here. 13,000 points from 18 is 1 lakh 1,000 2,000. Then 150,000. So 110 would be the minimum target. 110 to 115. 1,10,000 if it is a wave 3. So watch out the silver. Gold has got a stronger note. We are seeing the strong trend and the bullishness. What needs to be done, we need to watch out. All the metals are getting bullish. I am ultra bullish on lead. You like it or not, A B C D E ending leading diagonal and a fall, any dips by lead with just 180 181 as a stop. Dips would be a great opportunity to buy lead. 183 to 183.25 to 182.20 with 1 or 1.5 points loss. I am expecting lead to cross 187 levels and inch towards 220, 215, 220 as a positional target. This is based on the Elliott wave counts and my personal view. Zinc is already bullish. The metals are showing the good sign. So that's it on the commodities corner for the third week of October 2024 and also weekly market insights. Thank you everyone. Have a happy and prosperous weekend and also a forthcoming week ahead. Plan your trades with your RV. Till the next update. Signing off for now, your RV.